Facebook frenzy, you're looking at streaming stories as the story of the Facebook IPO unfolds. There it is on WSJ.com. You're looking at that right now. It's unfolding. Facebook looking at a $95 billion valuation. Good afternoon and welcome to the News Hub. I'm Simon Constable here at WSJ Live. We're going to go straight to Shandy Race with the Wall Street Journal out in San Francisco. Shandy, what else do we need to know?
Well, it looks like Facebook is seeking on the high end a $96 billion valuation, on the low end a $77 billion valuation. The $77 billion would, of course, be based on the valuation that the board had decided upon for the most recent Instagram deal. And they could be raising from $10 to $13.6 billion, so it would be huge in comparison to anything that's ever been raised before. And the other thing I would keep in mind is that this is the initial price range, and so it's probably going to go higher once they get on the road. So I would expect that it'll be, at least 96, could be even higher in another week or so when we find out a little bit more about how investors feel about the stock.
Now, this is going to exceed Google's IPO of 2004, right, according to your story, and it's going to put it alongside some very, very big companies.
Yeah, this will be one of the biggest of all time, and it'll be the biggest tech IPO ever.
Now, I want to bring in Bob O'Brien, who's here for the whole show. Bob, thanks for joining us.
Thanks very much, Simon. Now, Shandy, I'm a little surprised. I recognize that there's some stratagem in place here. And as you mentioned, you can expect the roadshow to generate a little enthusiasm and perhaps the stock price to actually move up before we actually price this. But, what was your first takeaway when you saw a lowball figure of $28 a share?
Well, right away, I spoke to some investors and I asked them what they thought, and they kind of were dismissive of the lower end of the price range. And the reason for that is because, when Facebook goes out onto the roadshow, they don't want to come out too high and then have to backtrack if investors aren't willing to pay a super high price. So it's going to look a lot better if they put in a very low end and then they go up significantly because investors are so excited about it. And of course, they also need to be careful because what we've seen happen with some other stocks is that while it'll go right up on the first day of trading, like with LinkedIn, it shot up like crazy, but then it goes down afterwards. You don't want to see that. You want to see that movement upwards and to the right. You don't want to ski slope.
Shandy, one of the things we've seen other companies do is to have a very limited flotation of shares, just a few shares of the total available out there, so that what demand is sort of pressured into a small area. This is not that, though. This is a lot of money they're looking to raise, isn't it? That's going to make it somewhat different.
Yes, no, it's true. They're putting out a decent float. I mean, at $96 billion, that would be the high end, so $13 billion. So, you have much higher than the sort of 6% to 10% was on the high end. Zynga was high at 10%. So Facebook is even above that in terms of the percentage of the float that they're putting out there. That's still on the low end, though. A lot of companies would go as high as 30%. Technology companies tend to be a little bit lower in the 10 to 15% range. So I would say Facebook is in line with the normal tech IPOs, whereas some of the other companies we saw, like Groupon and Zynga, were putting out a very artificially low float.
Well, but Shandy, in the case of Facebook, though, you do still have this dual class structure where basically the founders and insiders are going to control the overwhelming majority, virtually the entirety of the voting rights here. Is that going to be a controversy during the roadshow, or is that already sort of baked into expectations?
So that's really interesting. I've been told that it's baked into expectations. When I speak to investors and I ask them about the corporate governance issue, they sort of laugh at me because they say that they've been used to this type of governance structure since Google. And so they've sort of come to expect it. And it seems like the corporate governance critics and us in the press seem to care a lot more about the fact that Mark Zuckerberg owns 57% of the voting rights of this company. You say founders and insiders, it's really just one man. It's really just the founder, Mark Zuckerberg. And because he owns almost 60% of the voting rights of the company, he has unlimited power. I mean, he can do whatever he wants, and there isn't really much choice that anybody else has. But it doesn't seem like people care.
Shandy, and Bob, investors won't care about it until things go wrong, and then they'll care about it massively.
Sure.
That's always the way, right?
If all you want is capital appreciation out of your stock movement, and it delivers that, then you're fine and happy. Yeah. But if all of a sudden the company goes on an acquisition spree or decides to start making strategic moves that maybe you, the investor, don't fully agree with, then all of a sudden you might want to say.
Yeah, it's a great point. Hey, we're going to thank Shandy Race of the Wall Street Journal. Thank you very much.